Good morning, everybody. Hope you are doing well. It was great to see a lot of action out in the fields this week. Saw a lot of planters and field cultivators moving Wednesday through yesterday. So very cool to see. Markets were higher on the week. December corn was up 25 cents, and November soybeans are up 26 cents on the week. To start with soybeans, we closed on Friday at 14.97. We found really good support Monday and Tuesday when we had quite a bit of weakness at 14.38. And then we had some really good buying volume Tuesday through Friday and actually recovered all the major moving averages to close the week. Money flows are approaching overbought. The one concern I do have is the strength indicators. They made a negative trend line from the late February high and the late April high, and we are butting up against that again. And I really want to see these strength indicators break above that negative trend line to see a longer term bullish view on this market. Supports are at the 20 and 9-day moving averages, which are 1482 and then 1475. Resistance levels are 1507 and 1520. If we could get to 1520 this week, and maybe close above it, I would really think that would look bullish in the longer term here. Managed Money did sell 23,000 contracts of beans through this past Tuesday, and that would put the net long at 130,000 contracts, but that doesn't account for the buying they did from Tuesday through Friday. So that should be higher than that number. Corn closed the week at 748. Also found support at 708 on Monday and Tuesday. And then on Wednesday, it broke out of a really nice bull wedge, and we had a good move outside of that to the upside. All major moving averages were recovered by that day. And we actually made a new high yesterday during the day at 758. It was pretty quiet. We closed down at 748, but did make a new contract high. Strength and money flows are becoming stronger. And then the supports are at the 20 and 9-day moving averages as well, which are 739 and 733. Managed Money did sell 15,000 more contracts through this past Tuesday, which would put them at 338,000 net long. But that doesn't account for the buying they did to end the week. So numbers should be higher than that. And again, we have so many fundamental tailwinds behind this contract, still looking really bullish at this point in time. We had the May WASDE report released on Thursday. It was a very bullish price reaction after the report. The big surprise was the USDA came out with a 177 bushel per acre production estimate for 2022, which was about 4 bushels an acre lower than the trend line at 181. So that really helped the corn contract out. The price jumped pretty well after that report. And then also on soybeans, there is a forecasted record crop for 2022, but the demand also has never been this high either. So that really negated it. And soybeans actually had some good price action out of the report as well. The USDA did include a cautious statement about the Russia and Ukraine situation going on in the short term. So that did fuel more uncertainty, which led price to the upside as well. In regards to general updates, again, early in the week, we had quite a bit of profit taking before the report, and also a nice weather forecast did cause Managed Money to kind of reduce some risk with longs. And on Tuesday, the April inflation rate came out at 8.3%, which was quite a bit higher than expected. Food inflation came in at 9.4%. And after that, it really sparked some commodity contract buying, as commodities have really been the only investment to keep up well with the rising rate of inflation. Planting progress was released on Monday. U.S. corn was at 22% and Illinois was at 15%. And for soybeans, for the U.S., we were at 12% and Illinois was at 11%. quite a bit behind what we were last year. The U.S. balance sheet for ending stocks is tight, and it's expected to get tighter in the upcoming reports, which should help new crop futures moving forward. Again, end user demand and margins are still really high. So until price is high enough to where demand is slowed down, uh, you know, price should remain higher until the end users can't make good margins, or actually the margins turn negative. So, still expect commodities to stay up here as long as demand is still high from all the end users that are buying them. Crop insurance, no big updates. We saw a ton of progress yesterday, and Wednesday through yesterday. Went out and got some good drone footage, and was really good to see. If you do plant and need to replant, please call us before you do. We want to get a claim turned into the adjuster before you do get back in and replant. Other than that, hope you guys have a great weekend. If you have any questions or comments, please reach out to Larry, Susan, or I.